Good afternoon, ladies and gentlemen. I am Gordon Shirley, and as chairman of GraceKennedy Limited, it is my pleasure to welcome you to the 2022 GraceKennedy Annual General Meeting. This year, GraceKennedy celebrates 100 years in business. It is a special privilege for me to be serving as chairman at this historic time. On behalf of the GraceKennedy Board of Directors, we say thank you to all our partners and stakeholders for being a part of this wonderful journey. And a special thank you to our shareholders and team members for your steadfast belief in our company. We hope that you will continue being a part of the GraceKennedy story for the next 100 years. We will begin this afternoon's proceeding with a prayer by Jody Ann Barnett, Senior Business Intelligence Officer in the GraceKennedy Executive Office. Ms. Barnett.
Everyone, let us pray. Almighty God, you are worthy of all praise and honor, and we lift your name on high. We humbly come before you today with a grateful heart, dear God. We thank you for the opportunity we have to be alive at this very present moment, dear God. Even though we pause to remember all those who are grieving, dear God, persons who have lost loved ones due to illness, accidents, or senseless acts of crime and violence, dear God. We ask that you grant them courage, strength, even in this difficult moment, dear God. We present to you today GraceKennedy Limited, dear God. This company was founded 100 years ago and continues to grow from strength to strength. We thank you for the leaders that you have blessed us with, past and present leaders, dear God, who work assiduously to get the company to where it is today. We thank you for my fellow employees, dear God, all the employees across the world who work hard to contribute to the success of this company, dear God. We thank you for our shareholders. We thank you for our consumers, our vendors, dear God, who continue to support and invest in this company. And we thank you for the positive impact that this company has had in our countries and communities. Dear God, above all else, we want to acknowledge that we know that we could not have made it throughout these 100 years without your faithfulness and goodness towards us. And dear God, as we look towards the future, we lean on your almighty hand to guide us. We celebrate 100th anniversary, dear God. We thank you for all you have done in the past and all that you will do in the future. We ask that you continue to pour your blessings and favor on this company, dear God. And we give glory to the one who is able to do exceedingly and abundantly more than we could ever ask or think. As we convene this AGM, dear God, we pray that it be productive and that it will flow smoothly. Abide with us, Lord, now and forevermore. In your name we pray. Amen.
Thank you, Suzanne. Thank you very much, Jody Ann. I'll now introduce Mrs. Gail Solomon, our General Counsel and Chief Corporate Secretary of GraceKennedy Limited. Mrs. Solomon will perform the function of Corporate Secretary at today's meeting. Gail?
Chairman, I can advise that a quorum is present, and I will now take us through the protocols for today's meeting. Good afternoon, everyone. Thank you for joining us, and we ask that you adhere to the following protocols. We have allotted half an hour for the Q&A segment of the meeting. Thank you to those who have already submitted questions. Please note you still have an opportunity to send in questions via email to gkinvestor@gkco.com. We encourage you to identify yourself by including your name when submitting questions. Every effort will be made to address all questions this afternoon, time permitting. During the meeting, your microphones will be muted. However, we invite you to use the chat box located at the bottom of your screen to make comments. As mentioned before, however, questions must be submitted via email to gkinvestor@gkco.com. Only questions sent via email will be addressed during the meeting. When you registered for the meeting, you would have either identified yourself as a shareholder or a non-shareholder. As is customary, only shareholders or their duly appointed proxies are permitted to move and second motions and to vote on resolutions. Non-shareholders will not be able to participate in the voting process, but are, of course, encouraged to ask questions. To our shareholders, if you wish to move or second a motion, you are asked to raise your hand. Shareholders online may do so by either clicking the Raise Hand reaction button located at the bottom of your screen, or by using the Raise Hand function in the participants list located to the right of your screen. After each resolution is moved and seconded, it will be displayed on your screen. Shareholders will then be invited to vote on the resolution by clicking the For or Against button. Shareholders will have 30 seconds to cast their vote, after which the results for each resolution will be displayed on screen and announced. Shareholders who are here in the room and who wish to move or second a motion for a resolution, please do so by raising your hand. For our shareholders online, in the event you experience any technical challenges during today's meeting, you may reach out to our team for assistance by calling 876-932-3160. A recording of today's meeting will be uploaded to the GK website and on our YouTube channel by tomorrow. Thank you in advance for complying with these protocols, and we look forward to a successful meeting. Thank you.
Thank you very much, Gail, and thank you for confirming that we have a quorum present. The AGM notice was published in the newspapers in Jamaica and in Trinidad, and also posted on our website and the Jamaica Stock Exchange and Trinidad Stock Exchange websites. The AGM notice also appears in our 2021 annual report, which is available on the GraceKennedy website and for collection here at our headquarters at 42 to 56 Harbor Street. May I please have a motion that a notice of the meeting be taken as read? Ms. Kennedy and Grace. Shareholders online are reminded to use the raise hand feature to move or second this motion. Those shareholders in the room can do so by raising your hands. I would now ask that the first resolution be moved. Mr. James, seconded. Ms. Kennedy. Shareholders online, I invite you to cast your vote by clicking the For The results are in. Those for, 37. Those against, 0. I declare the motion having been carried. I'm sure that shareholders, as well as the management and staff of the company, will join me in expressing sincere appreciation to the members of the Board of Directors for their dedicated service to GraceKennedy and its shareholders throughout the year. We are very pleased to have all directors present in person or online. This afternoon, I take great pleasure in introducing you to our Group CEO, Don Webby, Mr. Andrew Masado, our Group CFO. Dr. Paris Luayi is unfortunately not with us, but is online. Dr. Indiana Mintakoy, Mrs. Gina Phillips-Black, Chair of our Corporate Governance and Nomination Committee. Mr. Peter Williams, who I expect to be with us momentarily, traveling in from Montego Bay, and Mrs. Mary Ann Chambers. Mrs. Mary Ann Chambers will be retiring from the Board of Directors in September of this year, in keeping with the mandatory retirement age for directors under the company's Article of Incorporation. Mrs. Chambers is a retired bank executive and former cabinet member in Ontario, Canada. She was born in Jamaica and has resided in Canada for many years. In addition to her successful career in banking, she has a distinguished and extensive record of voluntary service in education, health, and social services sectors in Canada. Mrs. Chambers was appointed to the GraceKennedy Board on May 26, 2011, and is a member of the Corporate Governance and Nomination Committee and the Audit Committee. Mrs. Chambers has served the board with excellence, and her wealth of knowledge and experience has contributed considerably to the quality of the governance, management, and strategic direction of the company. Although we will bid Mrs. Chambers farewell from the board of the parent company, GraceKennedy Limited, she will continue to be a part of the GraceKennedy family, serving as the chair of Grace Foods Canada, of the Grace Foods Canada board, and we look forward to her continued contribution in this capacity. I also take this opportunity on behalf of the board and the entire GraceKennedy family to congratulate Mrs. Chambers on her recent appointment as Chancellor of the University of Guelph in Canada. Jamaicans at home and abroad are together extremely proud of her many accomplishments, and the University of Guelph has made an excellent choice. We wish Mrs. Chambers all the best as she serves in this new role. The Group CEO, Don Webby, will now make a presentation on the performance of your company for the year ended December 31st, 2021. And he will be joined by Andrew Masada, our Group CFO. Don?
Good afternoon, everyone. Good afternoon to our shareholders online and in the room here. You know, we were all hoping that we would have a full house today in here, but as you have heard and read, COVID-19 is still very much here with us. And I read a statement from the Ministry of Health that we are in the 5th wave. So I'm asking everybody to stay safe. So on the screen there, you'd see a happy GK team celebrating our 100th anniversary. Our story is your story, celebrating the past, shaping the future. So my presentation this afternoon will have 5 segments. I'll go through the financial highlights for 2021. We'll speak a little bit about our strategic execution, with environment, social, and governance, a very, very important topic. Our 100th anniversary, and of course, the 2030 vision. Let me first of all introduce my executive leadership team. Most of you are here. Can you stand and be recognized? The A team, I would refer to them as. If you can stand and be recognized, Gail and Andrew. You know, I have often been asked, Don, how you do it? I have a great team, and you just met them in terms of our executive leadership team. Thank you, guys. I also want to recognize our board of directors, and let me make a special mention of our group chairman, Professor Gordon V. Shirley, OJ. I must say with all sincerity that Prof. Shirley is a great chairman for the GraceKennedy group of companies. And Prof, I want to thank you for your support and guidance throughout the years. You have been an excellent chairman for us, and I want to say that to our shareholders. I also want to especially recognize, which Prof did a minute or so ago, Marianne Chambers. Marianne, when I heard that you were retirement age, I said, boy, Marianne needs to check her birth certificate because you're looking so good. And welcome to Chris, her husband, who Marianne often shares some interesting stories. Marianne, let me say, and shareholders, a lot of you may not know Marianne personally. She lives in Canada, but Marianne never, ever misses a board meeting in Jamaica. And I have been around a long time, both in the public sector and the private sector. And I would say that Marianne, by far, is one of the best directors I've ever worked with. You can count on Marianne. If the I is not dotted or the T is not crossed, Marianne is going to pick it up. What she offers, she's like the mother of the board. She's sometimes strict with discipline, but at the same time, she's so loving and support. And Marianne, I want to thank you personally for all the support that you have given me over the years. And I wouldn't be standing here with so much confidence if it wasn't for you. I want to thank you so much, Marianne. You're a very special person. And I wish you well, not in your retirement, but in your new career. And you'll be still on the GK Canada board as chairman, and I'm looking forward to working with you in that capacity. Give Marianne a round of applause. She's a special person. I also, I was in two minds of whether I should speak about COVID-19, but with the fifth wave, as I mentioned before, I think it's important. I think it's really important. So when in 2020, I think it was March 2020, we had our first meeting re COVID-19 and the impact of COVID-19 on the world, Jamaica, and GraceKennedy. And the first decision that we came to was that the safety and well-being of our staff was number one. And that is how we started every decision-making after that, the safety of our staff. We held a number of town hall meetings. We had vaccination blitzes, as you can see on the screen, over 1,000 of our staff members being vaccinated. And there's an interesting story. We were in the parking lot. We were vaccinating our staff and we registered. And a lady from the community of Southside came to me and said, Mr. Webby, I can get vaccinated. I said, sure, you can get vaccinated. She said, you know something, Mr. Webby, I trust GraceKennedy. So that is why I get vaccinated. And that felt really, that touched my heart in terms of the trust that our colleagues have, or our neighbors have for GraceKennedy. There's one important point that I want to make here. We speak about the vaccine resistance, and Jamaicans always call our vaccination rate is about 26%. One of the things that I said to my staff and the team is that I need your help to keep GraceKennedy safe. Help me, please. And my team, the GraceKennedy staff, rose to the occasion. I stand here proud as a group CEO to say to all our shareholders, the media, and everybody in this room that our vaccination rate for GraceKennedy is over 90%. And to be exact, the vaccination rate of our staff in Jamaica is 90.9%. Right, Mr. Mesado? I'm not going to round it up, 90.9%. So let us look at the financial highlights for our audited accounts. As you can see from the slide on the screen there, we performed exceptionally well in terms of revenue, 129.3 billion Jamaican dollars, or 13.9 billion, up 12%. I remember when we were planning, Director Mintakoy, we had said 2022 we want to be at 100 billion, and we thought that was an aggressive target. But the message here, once you have a great strategy, once you're very focused on a great team, you will achieve. If you look at the pie chart there in terms of the breakdown of where the revenue is generated, 53.6% in Jamaica and the rest outside of Jamaica. Have a look at the UK and Europe, where you see that the percentage of the pie is 13.1%. The story behind that is that we have a food services company in the UK by the name of Funny Bones that we supply restaurants and pubs and other areas. I think we supply some hotels. And because of COVID-19, that company, their revenues were down. However, it has recovered nicely, and that is one of the reasons why you see that the market share, or the market segment in the UK has grown. Plus, our nourishment brand has been turned around. So we are extremely happy in terms of our revenue performance for 2021 versus 2020. Revenues up 12%, or $13.9 billion. In terms of profits, we had a good year. If you look at 2020, maybe I can use this bow sitting here. Can I, Andrew? Yeah. If you look at 2020 over 2019, you're looking at nearly a 50% increase in profits, and that was continued by another good performance of 20.3% or $2 billion for 2021 over 2020. Inside and outside Jamaica basically remain the same, 55% inside Jamaica, 45% outside Jamaica. But I have to make the point again, as I do every year, that both inside and outside Jamaica is growing. However, sometimes inside Jamaica grows faster than outside Jamaica and vice versa. But on a whole, our overall PBT was up 20.3%. Our PAT up 30.4%, another credible performance for the GraceKennedy group of companies. In terms of our stock price, I'm sure our shareholders will be happy to see this graph here. We had an outstanding year, 2021 over 2020, where our stock price actually went up by 59.6%. And basically, what that is saying to us is that the market has confidence in the performance of the GraceKennedy stock based on the financial highlights that I showed you. And they believe that the performance is sustainable going forward. 59.6% is something that all of us as shareholders and the executive team and the board should be very proud of. In terms of the first quarter, our stock price is up 9.6%. However, you will note that the market is actually down 1.1%. And I'm not sure how many of you follow the international markets, but the international markets took a hit yesterday where a number of stocks went down significantly. So that is something that we have to watch very carefully. But as shareholders, we should be happy. 59.6% year-over-year growth in the stock price and 9.6% year-to-date. In terms of the first quarter, our revenue performance continued to do well. We're up 15.5% or to 36.3 billion or 4.9 billion. The only segment that was not ahead of the previous quarter was money services, and I'm going to speak to that a little bit in my presentation. So the good performance of revenue continued for 2022, up 15.5%. In terms of profits, while you'd see a growth in PBT of 53.9 million and after tax of 39.4 million or 2.1%, our profit performance for the first quarter, I would say, was relatively flat. And again, our money services did not show an increase in profits. You know, colleagues, when you present at an AGM, it's important that you share as a group CEO and as a management team, the challenges that we're going to face for 2022. And I would like to share with you a number of challenges that we are seeing for 2022. First of all, the global inflation. If you look to your right, you would see that all the major markets are significantly up in terms of inflation. USA last year, this time was 1.2%, is now 8.5%. UK, 0.8%, is now at 9%. Canada, 0.7%, is now at 6.8%. And that is significant. And let me share with you why. I said to you early on that our money services business is down, it's 30% of our profits. If you think about our brothers and sisters, our diaspora in the UK, Canada, and the US facing significant inflation, the truth of the matter is that their disposable incomes must be down. So they have less money to send home. And that is one of the primary reasons why we saw a 9.4% reduction in remittances to Jamaica March over March. And quarter over quarter is down by about 4%. So this is not a situation that is unique to GraceKennedy. It's a situation because of the global inflation, disposable income in these markets are down and people have less to send home. The other thing that we have heard, because we went to meet with Western Union in Denver, we had a long strategic, Grace Burnett and myself and a few others, just to try and figure out why remittances are down. The other thing that was said to us is that because of the easing of COVID-19, people are traveling more, and Mr. Chairman, they're carrying the funds with them instead of remitting. So through Jamaican and Caribbean style. But we have a strategy in place. We refer to it as MPAC, marketing, pricing, agents, consumers, and compliance. And I'm very confident with the management team working with Western Union that we are going to turn around and see an improved performance of money services going forward. Supply chain and logistics. Wow, we spend a lot of time on our Monday morning calls dealing with that, headed by Zach Mars. And let me give you just an example of what is happening. We made a decision at GraceKennedy that it is better to have the goods in the warehouse than don't have them at all. That was a conscious decision that we made. Let us have this stock. And Director Chambers, you will know, if you run short in Loblaws, you're in trouble. They're going to have a heavy fine. Mrs. Coy, the same thing in Tesco. And the same thing in Walmart. So we made a decision. Our consumers are first. We need to have the products in. So, of course, we said that we're going to go long on inventory. What happened to us because of the issues in the ports all over the world, and especially the one in the USA, we normally receive about 80 containers a month for our LLC company, which is doing fantastic. In 1 month alone, colleagues, it was 180. So what you find is because of the backlog coming in all at once, right, it was a big challenge to clear. We have done so now. We have absorbed the cost in the first quarter, my CFO, and we believe that the future in terms of demurrage and other costs will be significantly reduced. But it was a big number. And I'll share with you, it was $2 million US. So it's a big number for the first quarter. Foreign exchange volatility, a lot of people don't realize, but the dollar actually revalued for the first quarter, December to March 2022. One of the things that certainly we are guided by is the differential in inflation. And when you have an appreciation of a dollar, when your differential in inflation is so wide, you really have to manage that very carefully. Interest rates has gone up. We have to look at that from our bank's point of view, Mariam, how we raise or deal with interest rates and the ALCO with our customers. Well, let me say this, and it has been in the press, and I'll say this in all sincerity, that the Bank of Jamaica has been coming under some criticism about their policy in interest rates and how they're managing the foreign exchange. Let me say, as the group CEO, that I have all the confidence in Governor Richard Biles and his team to manage us through this difficult period. And I believe that the moves that they are making in terms of monetary policy is the right one, and we just have to manage very carefully. Obviously, working capital management, Frank James, is going to become important. And then we have the lingering impact, Mr. James, of COVID-19 is still here with us psychologically. And as you can see, it has gone nowhere. I mean, when you look at a positive rate of 35%, is significant. So we have some headwinds, but let me say this to my shareholders and to colleagues, that we are very focused in terms of our strategy. We're very focused on execution. We have a great team in place, and we have been here before in terms of headwinds, and I feel extremely, extremely confident that we're going to have a strong 2022 when we execute on our strategy. So let me now share some of our strategies with you, the strategy execution. As I've shared many years, we have our key strategic objectives: consumer centricity, internal processes, sustainable growth and innovation, performance-driven culture. I think if you look on page 67 of the annual report, we have listed about 8 or 9 strategic initiatives that support these strategic drivers. I want to share a few with you. Mergers and acquisition. I'm not sure if Andrew Ryan is here, or head of mergers and acquisitions, but we have been doing extremely, extremely well in terms of mergers and acquisition. As you know, we bought 100% of Scotia Insurance, Eastern Caribbean, 7 territories, July 31st, 2021. That consolidation resulted in a gain of $593 million, and it was very, very accretive. For the 5 months that we owned the company, when it was finalized, we made $94 million. So obviously, we realized that GK, or life insurance, is an area or a segment that is an opportunity for GraceKennedy to expand further. So we have applied to other islands to register outside of the ones that we acquired, and we're actually looking at an additional acquisition to expand GK Lives. So I'm hoping at the next AGM, I will be able to say to you, our shareholders, that we are now into about 14 or 15 countries. But we're very focused on it, and we believe that this is an area that GraceKennedy can and will expand. Blue 876, we acquired 876. Frank and his team doing an excellent job. Renee, since we have acquired 876, the growth has been over 40%. So congrats, Mr. James, on the excellent work you're doing in terms of building our 876 brand. I just love that name, 876. It feels Jamaican. Key Insurance, you'll remember that was a turnaround effort for us. You would see in 2020, the company lost $300 million, and we turned it around, and we are happy to report a profit of $160 million for 2021. Having said that, inflation is also going to be impacting our insurance industry, and I'm sure those of you who follow that segment closely will see a number of other companies are reporting much higher claims levels because it's inflationary with imported parts, etc. Nevertheless, Tamara and Stephen and Grace and the team were watching that one very carefully, and our first quarter results was positive. Blue Dot, as you'll see there, me trying to look young in my hat, it's an acquisition that I really enjoyed. Why I enjoyed it? It's kind of a new world for some of us in terms of where these youngsters are taking data analytics. So you see here, we're talking about consumer neuroscience, biometrical and physiological responses from consumers. It's such an interesting world out there, and I must say I learned a lot from Lauren in the due diligence, and Lauren will tell you that he learned a lot from me in terms of corporate governance, risk controls, and how to grow a company in a structured way. I'm very excited about Blue Dot. I think it's a good marriage between a youngster, and if I may call myself an oldster at this time. But I am very optimistic about Blue Dot. In terms of hot off of the press announcement, last week Friday, I signed the agreement with Trinidad and Tobago Unit Trust Corporation Alliance. This is where we're going to be offering mutual funds, I would say in another 3 months or so. The US Dollar Income Fund, Money Market Fund, and the Growth and Income Fund. Unit Trust of Trinidad is the largest financial institution, certainly indigenous in the English-speaking Caribbean. They actually manage US 3.7 billion and have 625,000 investors. I was happy, and I said it to Nigel Edwards there, who you see is the managing director, that we need to have more strategic alliances, more investments together with Caribbean companies. And this is one of the first time that GraceKennedy in Jamaica is actually expanding, forming a strategic alliance with a Caribbean giant. And we are very, very optimistic about this acquisition. Digital transformation, I've been speaking about this for a long time, and I'm happy to share with you this video. Can you turn it up there, big man?
Today, I'm going to be showing you how to sign up for the GK1 app and collect a GK1 prepaid Visa card. With the new GK1 app, you can send and receive remittances and pay your bills straight from your app. You don't need to come out of your house. You'll also get to buy your favorite Grace products with your GK1 card. Let's get started. Go to the Google Play Store, download the app. Open the app, sign up. When you're done, you'll see that you're now able to apply for your GK1 digital card. At this point, we're going to need a few things. First off, you need your ID, and this can be a driver's license, your voter's ID, and of course, we're going to need that really nice selfie of you. We're almost done. Remember to select the GK1 branch closest to you to pick up your card. Once you've been notified that your card is ready, go to the GK1 location you selected, and please don't forget your ID. After you're verified, you'll have to activate and pin your card. Easy cheesy, you're done. You can check your card balance and transactions from your app. You can use your card to withdraw money at an ATM. And of course, you can shop anywhere that accepts Visa. Enjoy a new world of convenience and security. We can't wait to see you come in and collect your Shelly card.
Okay, colleagues, you can clap, man. I was saying to my team, by the way, shareholders and colleagues online, and that's not a paid advertisement, right? But let me tell you something. I showed it with a lot of pride. I showed it with a lot of happiness in terms of what my team has been able to accomplish in a short period of time. And I want to use this opportunity, Stephen, Ricardo, Alison, Grace, everybody. We have our digital steering committee, which I chair. And I can tell you, we have some great people working with us at GraceKennedy. Loyal, dedicated, focused in terms of meeting their objectives. And that's why I said to you, I showed that video with a lot of pride. And pride not only as a GraceKennedy team member, but as a Jamaican in terms of what we can achieve if we put our minds to it. So if you look on the chart on the screen, our prepaid card and wallet is going to be ready by the end of June. Our inbound remittances is going to be ready by the end of June. Bill payments is there. It's fantastic. It is great. Credit card application and tracking. I'll share a secret with you, Mr. Chairman. We launched it a week ago, and we have well over 200 applications already. So it's a lot of excitement in terms of GK1. By the way, somebody had asked, I think Marian, probably you in one of the board meetings, about customer acquisition strategy. One of the things that, in terms of looking at it in the steering committee meeting, believe it or not, our GKVR program, you know that we have about 160,000 active members on the GKVR. Chris, that's the GraceKennedy Value Reward Program. We have said that if we target in terms of GK1, and we talk about cross-selling, right? This is going to be a it's going to be a game changer for the GraceKennedy group. And I'm so excited about that. So GKVR, in terms of customer acquisition, I'm being very focused on the whole concept of cross-selling. Gail will tell you that high-low e-commerce site is up, it's doing well. While it's not showing here, we're talking about an ecosystem for the GraceKennedy group using your phone to connect to everything. And I believe that this is the way the world will go. Another area that we are very proud of is our Grace-owned brand worldwide. Mrs. Kai, I have a real growth figure of about 10%. And here are some pictures which I look at with a lot of pride when I'm in the markets. This is actually a Walmart in the USA, where you see our Grace patties being displayed and our sauces. And Prof. Shirley, I'll say it before you say it to the audience. So Prof. Shirley and I were in the market in New Jersey. I was standing up in front of right here, admiring the Grace patties with the GK100. And then this Hispanic gentleman came up and pushed me out of the way and then picked up the beef patties. And Prof, in his usual diplomatic style, says he didn't realize that he pushed the group CEO out of the way. And I said I still like him because this guy was very focused. He knew what he wanted, Grace. He wanted the Grace patties. And once you want the Grace patties, you and I are going to be friends. But it was good. Hispanic, really, really going straight after the Grace patties. And he was so anxious to get it that he pushed me out of the way. There's another story that I like to tell, and I hope I'm not going to take up too much time. This product here is called a Grace jerk sauce. And it's a great, great story. And I want to share it with you again. I did it at the investors briefing. So GraceKennedy, many years ago, we entered into a partnership with our farmers in St. Elizabeth because we recognized that we're importing pepper mash from Costa Rica to Jamaica. We said, that don't make sense. We are going to partner with the farmers in St. Elizabeth to grow pepper. We did, and it has worked well. Then we start our own processing plant in Hounslow, where when we buy the pepper and the onion and the scallion from the farmers, then we process it. And in 2020, Frank, the loop was closed, where we actually established our own bottling plant for our jerk sauce. So what I'm saying to our shareholders and to the audience, that when you look at that product of authentic Jamaican, by engaging our farmers, by buying the pepper and the scallion from them, by processing it, and by further bottling it, I can tell you that's a very, very, very proud moment. And you know why? As I said, Frank knows the story. When the farmer came to me and said, Don, Mr. Webby, or boss, or whatever him called me, and so I can send my daughter to school, because the bank is now going to accept that I have a contract with GraceKennedy. You know how that made me feel? And when I think of when I think about the process, it's all Jamaican. GraceKennedy, we bottle our own jerk sauce. You can't get more authentic than that. And then when I look on it in Walmart, the biggest retail chain in the world, it's a great feeling. Great, great feeling. And then here's Canada. Mrs. Chambers, see your baby here? Loblaws and Walmart in Canada. And you're going to see the same jerk sauce there. So can you imagine as a Jamaican living in Canada, or a Jamaican living in Canada, and you're walking in the aisles of the biggest supermarket chain, Loblaws or Walmart, and you're seeing that in Canada, what a proud feeling. What a great feeling. So as GraceKennedy shareholders and members of the team, I'm sharing this not only as a GraceKennedy team member, but as a Jamaican, of what we can achieve if we put our minds to it. If you think so we're done, we just come. This is the UK. This is Tesco, the largest retailer in the UK, 30% of the market. Look at our products there. Look at our products there. Encona sauce is somewhere here, Encona sauce. It's not in Jamaica, but it's made by our factory in the UK. And the pepper sauce is from St. Elizabeth. So we are now exporting the pepper mash to the UK to make Encona sauce. And you know, I get very excited when I see, so Mr. Staple not here, you know? I get very excited. So I like to walk High Street, Kensington. And Gina, there's this upscale restaurant, man, you know, and people, and I'm walking, and I say, well, that's Encona sauce on the table at that 5-star restaurant. And then so sit down here, Encona sauce, Encona sauce. I said, I thought I was crazy, but I was proud. I was proud. So all of what the strategy I'm showing you cannot happen without a strong team in place. And as I introduce my executive team, you know, we have been through a difficult period with COVID, and I need to use the opportunity to thank every employee at GraceKennedy for their dedication, their loyalty, their hard work in terms of keeping this great company going. Sorry, she's not down here, but the lady that serves me coffee, Colette, every morning, and she asks if I'm okay, and I'm asked if she's okay. Miss Colette, I love you. I love you. We need to respect everybody and love everybody in our company, whether you're serving coffee or you're signing the checks like Andrew Masado. So I like to do my research, and I came up with this thing about teamwork, and it really, really resonated with me. It says, individually, we're one drop. Together, we're an ocean. And I have always encouraged my GraceKennedy team that we're an ocean. Look out there. And being an ocean, nobody's going to stop us for continue being great, and I'm going to share the 2030 vision with you shortly. We like to benchmark against the best. The best is at 65% based on international studies. GraceKennedy is at 72% in terms of employee engagement. I said it last year. And you know, people ask me the same question in different ways. I said it last year, and I'll say it every year. If you want to have, if you're a CEO and you want to report strong profits to your shareholders, the first thing to do is ensure that you have strong employee engagement. There's a strong correlation, Naomi, between profitability and employee engagement. Take that from me. So once you start from that basis, not on the balance sheet or the P&L or cost structure and strategy, start from the basis of ensuring that you have an engaged team, and then the rest will follow. I really believe that very strongly. So we celebrated with our employees, Employee Appreciation Week. There you see our team, I was going to call them the Grace Thrillers, but that name is out. These are our staff members. Sandrina. I told them I want to be their managers because they sound so good. They really did. And Naomi, congrats. Excellent Employee Appreciation Week. And I really thought the staff appreciated it. This is something that we're also very proud of, and I know Gina Phillips-Black is smiling. The last year JC Awards, Corporate Governance, let me say with all my humility that we won everything. We won the GraceKennedy Group, won the Governor General's Award for Excellence, which is the highest award that you can win in corporate governance. We won the PSOJ Corporate Governance Award, Prof. Shirley. We won the Best Annual Report. We won the first run-up in Corporate Disclosure Investor Relations, and GK Capital was the winner of Investor Relations. So, colleagues, this is not by any coincidence. This is, and those of you, my board members, Mary and Peter, Gina and Indiana, and of course led by our chairman. We have zero compromise at the GraceKennedy Group in terms of corporate governance. And this is the reflection that you're seeing here in terms of winning all those awards. We just got the letter, gave us the letter from the JC. Anyway, we just got the letter and we are, Mrs. Phillips Black, we are AA. AA. So if you were a child taking AA back to your shareholders, right, they're going to be very happy in terms of an AA rating. It's the highest rating you can get, AA, and that's why we won all the awards. And shareholders online and everyone, can you just give the GraceKennedy team a round of applause? This is a big achievement. The other area that I'd like to share with you, and I'm not going to spend a lot of time on this one here, but ESG is becoming significant in terms of any corporate entity in the world. And if we are saying that GraceKennedy is an international company headquarters in Jamaica, we have to embrace ESG. I've been in meetings with investment bankers, you know, and they're not going to even talk to you if you don't have an ESG policy in place. They're not even going to talk to you. So GraceKennedy, for the first time, and if you refer to your annual report, 74 to 75, we actually published our ESG policy. And it's in line with United Nations Sustainable Development Goals. And India, and I know you're all excited about this. So you see, I talk about alleviating hunger, developing better for you products, engaging our diverse talent, so important. And of course, Grace and Andrea and Gail and Naomi has asked me to specially mention that 60% of our senior management positions are led by women. Over 60%. And then Professor Shirley, my response is that, and Mariam, my response is that they are not there on the executive team because they are women. They are there because they are great, great professionals, and you can give them a round of applause. Investing in communities and promoting circular economy. The next one is our foundations. Very pleased with our foundations. We're now sending over 1,000 students to school. 1,060 is actually 1,088 from last week, and I'm extremely happy with that. Here's a big project. Caroline Mafood is leading this one here. We're talking about Clean Harbor, where we have an interceptor barrier, and if you look at that lovely harbor there, the pollution is just too much. When you walk on the waterfront there and you see the bottles, you feel like cry. So we are playing our part in terms of keeping the harbor clean, and this is a project, Ocean Cleanup, Catherine Kennedy, that we want to continue to expand. Boys and Girls Championship was a total success again, a number of records being broken, and we're really giving, you know, let me share with you that GraceKennedy, we spend upwards of 100 million Jamaican every year on Boys and Girls Champs. It's a lot of money. There's a lot of hard work by our team at GraceKennedy to do that. And I was asked, quite rightly so, by an investor, investment analyst, one of these auditors, of what is the ROE or ROI, Andrew, on spending 100 million on Boys and Girls Championship. Of course, I didn't have the figure on hand, but I know that we had done a brand research, and the first recall for Boys and Girls Championship, first recall for the name GraceKennedy was Boys and Girls Championship, so it's closely associated. And I thought about it very quickly. And I said, you know, sir, I don't have the ROE on me right now, but what I can say to you, it's an investment in the youth in our country, it's an investment in our schools, and it's an investment in Jamaica, and I think that justifies the expense. And his response was, Mr. Webby, I agree with you. In terms of GK100, you know, Marcus Messiah Garvey is one of my favorite people in the world. And as we reflect on our 100th anniversary I share this quote with you. A people without the knowledge of their past history, origin, and culture is like a tree without roots. Marcus Garvey. So, as I reflected on 100 years of Grace Kennedy, I always remember that quote from Marcus Garvey. A people without the knowledge of their past history, origin, and culture is like a tree without roots. Here are some interesting facts. Were established February 14, 1922. It's actually on page 14 to 17, but let me just pull out a few. So in the room, you had Dr. John Grace and Fred Kennedy. Fred was your great-grandfather or grandfather? Great-grandfather, Catherine, and James Solomon as the first accountant. Chris Chambers were capitalizing a dray and a mule. At my age, I didn't know what a dray and a mule is, but nevertheless. Our revenue was £15,000. We are now 800 million US company. And we had an impressive profits as the AGM would have said of £800. We are now over 60 million US dollars. There's a point that I wanted to raise. Say in the 1950s. And I'm skipping around, but those of you who want to look at the details, you can turn to page 14 or 17. When Grace Kennedy, and you hear us say that it's in our DNA of we care. And we have the love triangle, or love circle of we care. Listen to this, colleagues. This is the time of the height of colonialism in Jamaica. This is a company that was formed by Jamaicans. And in 1950, right, Grace Kennedy became the first Jamaican company to establish free health care, pension scheme, and life insurance for the staff. In 1950, in those days, that was unheard of. When I look and see that we established Grace Kennedy and Company Canada Limited in Montreal, from 1950, Mr. Kennedy and Solomon and Alexander, we were thinking about being an international company already. We were outward thinking about this Jamaican company being international. And sometimes when I stand as the group CEO, I say to myself, our founding fathers must be very proud of where we are today. Here is another interesting fact. We were listed on the Jamaica Stock Exchange on September 11, 1986. There's an area, it's not here, but in the 70s when Jamaica was going through turmoil, and it was shared to me by Packer Kennedy, actually. High migration, economy all over the place. That was one of the fastest growing decades in the Grace Kennedy group, and we grew a lot by acquisition. And I think Packer Kennedy and Jimmy Solomon told me this story because in challenging times there are going to be opportunities. And Carlton Alexander, the leader at that time, saw the opportunities and saw the growth potential for this company when Jamaica was melting in the 1970s. And here you'll see I and I in my red tie. That is Monsignor Rankasoon from the Mustard Seed. We gave God thanks, and Archbishop Ken Richards, our service of Thanksgiving. And I'll say that we are nothing without God. And we celebrated in terms of giving God thanks on February 13th, 2022. And here you see some happy-looking Grace Kennedy executives for our 100th anniversary. And then you see Ding Dong there. Frank was trying to do the dance, but he didn't do it that well. And I was a little bit worse than Frank. But the employees were very happy enjoying Ding Dong, who is our brand ambassador. One of the initiatives, and I asked Gail Solomon to lead this one for me, given the rich history which I showed, excerpts of 64 Harbour Street, where we started in 1922. I would like to convert that to a GK museum. I want to do it well. I want to do it well that children from the schools can come and visit, and it be educational for everyone. Or even visitors from overseas, Jamaicans from overseas, can come and see it. So I hope, Mr. Masada, you'll provide the necessary resources to get it done. But I think it will be I think it's a great initiative. And Gail, hopefully we can get that off the road very quickly. All right, so I have made a statement, which I'm very passionate about, that the best is yet to come for GraceKennedy. And it's something that I really and truly believe. We went through a very detailed exercise, and you'd see here, where what is not there, that we're in over 70 meetings going through with Pricewaterhouse and other consultants, our 2030 vision. And I did raise it at the last AGM. Now let's take a sip of this lovely water, 876. I hope the camera is catching it here. So we engaged Pricewaterhouse International, and we said, listen, I said, I want you to force us to dream. Let us think where we can carry this great company by 2030. And Pricewaterhouse International helped us along. We have developed high-level targets, the roadmap, change management plans, which is extremely important. And then we had discussions with our investment bankers. We're about to appoint an investment banker to help us to list or advise us on listing an international stock exchange, our food division. And then in January of this year, I presented to the 500 of our senior executives. And we're starting the consultation process in terms of shareholders, which we're doing now, and stakeholder engagement. So it has been a very detailed exercise from July 2021, and a lot of work has gone in to developing this Vision 2030. So we actually, and I guess this is the first time it's going to be shared publicly, our new vision. And let me read it for you. It's to be the Caribbean's #1 brand with Jamaican roots and a global reach, by building on our core pillars of foods and financial services to provide strong returns to our shareholders and improve the quality of life of our team members, customers, and the communities we serve. So this will be the vision which I'm officially launching this afternoon for the GraceKennedy group of companies and sharing with our shareholders. And purpose, we decided to put a purpose as part of our vision, journey, and statement, to bring superior products and services to customers that contribute to a better global society and greater financial well-being. I think that's so powerful, to bring superior products and services to customers that contribute to a better global society and greater financial well-being. And as you know, I've said on many occasions, colleagues, what gets measured gets done. So we have set ourselves some KPIs, very aggressive. So our revenues and profits now are 47% and 45%. Outside of Jamaica, we want to carry that to 70%. So I'm not saying for one instance that we're not going to be growing fast in Jamaica, but what we're saying is that we're going to be growing faster outside of Jamaica. Our revenues now are $813 million. US dollars. We want to be a 2.1 billion US company by 2030. Our profits now are US 68 million. We want to be at 250 million. And of course, our staff has to be a part of our vision to motivate employees to pursue growth, create a better life, attain wealth, and achieve common goals. And the foundation of that is going to be and has to be our ESG policy, where we integrate environmental, social, and governance principles into the core business to enhance long-term shareholders' value. So all of my executive team can recite, or without looking at the screen, these objectives, these KPIs. 70% of revenue and profits outside of Jamaica, revenues of 2.1 billion, profits of US 250 million. And of course, I really believe, colleagues, what I showed you in terms of Indiana, our products in Walmart and Loblaws and Tesco. This is an international food business headquartered in Jamaica. And I feel extremely, extremely strong that this company, the food business, can be listed on an international stock exchange. And we are about to sign up on some investment bankers. And they thought so. They said, Don, you're reading it right. There's a strong demand for ethnic foods, especially in the US market. So we are pursuing that with our investment bankers. So colleagues, as I close, I know my presentation has been a little long, but I wanted to cover GK100 and the 23rd Division. I want to take this opportunity to thank all our stakeholders for their unwavering support and loyalty as we realize our mission and vision, guided always by our core principles of honesty, integrity, and trust. As I always say, the best is yet to come. Mr. Chairman and shareholders, God bless all of you. God bless our company. And God bless Jamaica, the greatest country in the world. I thank you. I now hand over to Mr. Andrew Masala, the gentleman with the checkbook.
Okay, good afternoon, everyone. And I'm just going to give some highlights of our financial performance for 2021 and just a quick overview of 2022 Q1 results as well. So as you would have heard Don say earlier, we had a fantastic year in terms of financial performance. And so to give you some highlights in terms of the key metrics that we measure of our performance, we did have a positive, thank you. We did have a positive outlook and a positive return on all of our key metrics for 2021. In terms of revenue, we grew by 12%, or $13.9 billion to $129 billion for last year, led by all our segments growing, and you'll see later on in the presentation how each of the segments did. In terms of profit before other income, growth of 7% to $7.3 billion. And this is an indicator when you see growth here is that our operating performance is improving. And so this was led by the growth in revenue as well as improved performance in our gross margins as well. And then for our profit before tax, you see a $2 billion growth to $11.7 billion, a growth of 20% before tax. Now, with the profit before tax, what we saw was for the first time in our history, we exceeded $10 billion in pre-tax profits. So a milestone performance there. In terms of profit attributable to our shareholders, this is really the profits that are part of directly for GraceKennedy shareholders. So after you take off, the minority shareholders, the non-controlling interest shareholders, this is the portion of profits that is yours as a shareholder of GraceKennedy. That grew by 31.7% to $8.2 billion. In terms of our assets, you can see that we are almost hit the $200 billion mark, a growth of 16% or $29 billion. In terms of the highlights on the balance sheet for assets, you would have seen that our liquid assets or bank or cash and deposits or investment securities and also our working capital items grew. Now, earlier on in the presentation, Don had mentioned the challenges with supply chain and logistics. So you would have seen that things like inventory grew by $4.8 billion. Now, there is a cost for growing your inventory, but there's an even greater cost of having no goods to sell. And so we had to make that decision that in times when there is scarcity, there's uncertainty, there are challenges with production, challenges with getting the goods to the destination, then you really have to buy not just in time, but just in case as well. And so we took that decision that we need to increase inventory to have the increased and better availability of products on the shelves. And then stockholders' equity going up by 12.8%. now at $67 billion. Now, with this improved profitability and also with our improved liquidity, what you will see is that we were able to improve our dividend payout. So over the years, you've have seen steady growth, $1.1 billion back in 2017, now at $1.9 billion. For the year 2021, dividends grew by over 20%, or $326 million. And so we're very happy that we can return to shareholders not only an increase in the share price you'd be observing, but also cash returns for shareholders that need ready funds. It's one thing to have an improvement in capital appreciation, but also our shareholders do want to get a cash return as well. In terms of a segment performance, I had mentioned earlier, in terms of our revenue, you would see that for 2021, the food segment, which is the red bar, is actually over $100 billion. So we did meet $100 billion target for 2021 in achieving over $100 billion in revenue for our food segment by itself. But all the other segments also grew. So all four segments you can see from that slide have shown growth in our revenue, led by insurance at 20%, and then food trading at 11.8%. In terms of food trading, we had double-digit growth in revenue, not only in our domestic market, but also in our international market. So both growing very strongly for 2021. In terms of banking and investments, what we saw was improvements for the bank. On the balance sheet, you'll notice that customer deposits have increased. So we are increasing our lending to our customers. There were growth in other revenue as well for our bank. For investment securities company or asset management company, GK Capital, they also showed good growth in revenue as well. And as was mentioned earlier, they did win the JSC Award for Investor Relations in 2021. In terms of insurance, we did acquire Scotia Insurance in the third quarter of 2021. That company has shown good performance and contributed to the revenue growth as well. We rebranded that company GK Life Insurance. And then money services growing by 7.8%. We did see improvements in transaction volumes for 2021, which improved our growth there. We also started offering digital registration in Guyana and Trinidad. We had it previously in Jamaica starting in 2020. In terms of the profits, you will see that for the segment performance, 3 of our 4 segments showed growth. So on the money services side, you'll see growth now. That segment is now contributing over $4 billion in profits. So the revenue growth did also translate to improved profitability. We also saw that our direct-to-bank transactions increased by 80% in 2021. In terms of banking and investments, you did see a decline. So First Global Bank was successful in 2021. They had increased revenue and increased profitability. However, that banking and investments division overall would have invested very heavily in terms of technology or digital platforms. And so those investments would have used some of our funds to do that. In addition, our merchant bank in Barbados, Signia Globe, they did have a difficult 2021, mainly because in Barbados they did experience lockdown measures for part of the year, but we have seen in 2022 a recovery for Signia. In terms of insurance, you can see that that segment has done very well. It's now over $1 billion in profitability, growing by 34.6%. And what we saw for insurance is good growth in revenue translating into improved profits. I mentioned earlier of our acquisition and the new company GK Life. That company has contributed profitably to the division, to that segment. We've also seen improved performance for GK General Insurance, and for Key Insurance, they had an excellent year and did experience a better claims ratio performance. The other company in insurance, Canopy Insurance, did show improved revenue. However, they did have higher claims levels for 2021, which would have impacted their profitability. And then our food segment, as you will see here, 40% growth for foods, doing very well both locally and internationally. On the international scene, all of the international food companies showed improved profitability for 2021. And on the domestic side, we saw growth in our distribution companies, as well as our retail chain of supermarkets, Hilo food stores, did very well. In terms of the factories, they had steady performance, but they were impacted by supply challenges in terms of increased cost of raw materials and availability of products. However, they did hold their own. And so overall, you'll see that for the food segment, they are now the leading contributor in terms of the most profitable segment. You know, in 2020, they were almost neck on neck with money services. They are now the largest contributor to profitability. So we see good diversification in terms of profitability across our segments now. I will just give some quick highlights on the balance sheet in terms of what our financial position looks like. I mentioned already on the asset side, you would have seen that we are just about at $200 billion at the end of 2021 in terms of assets, growth in our cash and deposits, investments, the working capital items I had mentioned earlier, as well as deposits, as well as the loan portfolio for the bank. On the liability side, you would have seen growth as well, coming from customer deposits for the bank, as well as increase in payables. Now, within payables, there are our insurance reserves, which is our reflection. The growth there is a reflection of the growth in the insurance businesses that we have. In terms of our debt-to-equity ratio, you'll see that it's been steady over the past 2 years, and generally, we have kept a conservative debt-equity ratio, not overextending ourselves in this area. So let me turn now to how we've used our funds to reinvest in the business. What you'll see is GraceKennedy has a history of continuously investing and reinvesting in our businesses for future growth. So in 2021, you'll see that we invested $3.7 billion in additional capital items. These would have included upgrades to our factories, our canning plant, or meats plant, or plant that deals with soups and powders, national processors, as well as Grace Agro processors. We have also invested heavily in technology, both in the hardware infrastructure as well as software. First Global Bank would have launched its Global Access Plus, which is an enhanced online banking platform last year. We would have also invested in our IT infrastructure for financial services with Oracle, unifying our back office in terms of financial reporting, and a series of other investments in IT, including the digital factory. So continue to invest heavily in our capital items. You'd have also heard that we'd have invested in 876 Water brand as well. And as you can see from the return on equity, it's actually the highest we've seen in over 10 years. This is a 5-year graph, but looking back, it would actually be the highest in over 10 years at 12.8%. So good return and steady growth for 2021. Now, just to give, again, very quick highlights on 2022's first quarter results. On the revenue side, we grew by 15.5%, or $4.9 billion to $36 billion for the quarter. You would see that 3 of our 4 business segments showed growth, led by the food division, now at $29.5 billion. Also seeing growth in the banking and investments segment, as well as insurance. Money services, as you would have heard earlier, we did see that the remittance flows to Jamaica have declined for the first quarter of this year. And therefore, that side of the business would have been negatively affected by remittance flows, as well as a volatile foreign exchange market. And then in terms of profit before tax, you would see that 3 of our 4 segments, again, have shown increased profitability for the first quarter. One thing I do want to highlight here is you would see that the purple column, which is money services, is the only one that we've seen a decline for the same reasons I mentioned on the revenue side. But even with their decline, the growth in profitability of the other 3 segments were more than able to make up for that shortfall. So the group showed improved profits for the first quarter of 2022, growing to $2.6 billion, a growth of just over $54 million. So continue to show growth in both revenue and profits for 2022 first quarter. And thank you very much. Those are the financial highlights.
Very much, Don and Andrew, for those excellent presentations. Ladies and gentlemen, we will now take the next 30 minutes to answer your questions. Let me remind you, Gail had told you a couple of times before, let me remind you that for those watching online, you can still send your questions via email to gkinvestor@gkco.com. There you have it, gkinvestor@gkco.com. Please do not submit the questions in the chat. The questions have been coming in. Don has access to those questions, and so he's going to quarterback the process of responding to those. His various executives are on call. He has done the presentations. They will do the heavy lifting and answering all the hard questions. But I hand it over to Don. Don?
Thank you. Thank you. Is it on? Yeah, thank you very much, Chairman. All right, I have quite a few questions, but let me start off with the easier one first. And maybe Gail or Suzanne, you probably want to chip in on this one here. Any other upcoming promotions for the GK 100th anniversary? Question. Then shopping spree? Question. So who's going to take that one? Remember, Mr. Masada is listening.
It's a great recommendation. Thank you. I think that's from Mr. Rose.
It is David Rose.
Great recommendation. We have quite a few more things planned through to the end of the year, and we'll certainly take that on board. Suzanne leads the committee for GK 100, so we'll take it back to the committee, and absolutely. Thank you for that good suggestion, Mr. Rose.
Okay. Thanks. Thanks, David. Okay, Franco. Frank is here? Franco, probably you're the best person to answer this one here. Has GK explored more solar options and fuel-efficient means to cut down on expenses associated with a rise in commodity prices?
Thanks, Don, and thanks for the question. Yes, we actually have an energy committee that is looking across the group at how we can both look at more cost-effective ways for energy, as well as in line with our ESG policy, ensure that we're using more renewables. And so we have presented and gotten the support of the executive committee for a 5-year plan, which will see us introducing more solar and LNG type technology and renewables in line, as I said, with ESG as well as cost efficiency.
All right. Thank you, Franco. Thank you, Frank. Andrew Masada, there are about 3 questions here, one from David Rose and Philip Burgess, and another gentleman, Francis. Anyway, the question is about stock split. In a number of ways they have asked that question. Can you share with us your thoughts on stock split?
Thanks for those questions. Thanks for that question from very interested shareholders, I'm sure. And so, yes, as we had mentioned in our investor briefing earlier this year, and previous to that, we have been looking at whether it's a right opportunity to do a stock split. We have been doing our research, looking at the factors that would need to be considered in a stock split and when is the right timing for it. What we have observed is that the stock price continues to rise. Now, oftentimes you say you do a stock split to improve the liquidity and tradability of a stock. When it reaches a certain level, the trading of it can be stalled because it's unattractive at a certain price level. However, we haven't seen evidence of that at this point. For the first 3 months of this year, we've seen that the price has gone up by nearly 10%. Now, if you look at that, a 10% growth, 10% return on any investment in 3 months is quite significant. So we haven't seen evidence that the stock is at the incorrect price in terms of being unattractive in terms of liquidity. So we continue to monitor it. It's definitely on our radar. And so we will continue to look at when is the best opportunity to do a stock split.
So, Chairman, what I'd say is that as a board and as an executive team, we are always looking at ways to try and maximize the capitalization of the company, shareholders' value. And what I can assure our colleagues is that the issue of a stock split is being carefully analyzed, carefully monitored on an ongoing basis. And as soon as a decision is made, we'll inform, we'll go to the board for approval, and then we'll seek approval from the shareholders and from the stock and advisor stock exchange. The other question is the progress on NALPRO canning. This is from Leon Francisque. I hope I'm pronouncing your name right. So let me read it. The progress on the current scheduled completion date for the merged NALPRO canning plant. When can we expect merged operations to commence? I would think I would discuss that as an executive last week in our strategy talk. I'd say in the second half of this year, Frank, for us to complete the third quarter, the merge. And our plans in terms of efficiency and cost saving and innovation, we still remain on track for that. Is Arthur here? Arthur, come up here, man. I don't see this long time, man. You look like you're getting younger. Eh? Everybody, this is Arthur Ellis, one of our famous shareholders. Good man. Yeah. I'm going to read your question now. Yeah, man. Thanks, Arthur. You're looking well, man. All right. Arthur's question is, please comment on whether Grace's factory currently produces at optimum capacity and whether any spare capacity can be used to service any other distributor to boost our bottom line. That's actually a very, very good question, Arthur. Let me just say that we have a number of factories, and the capacity utilization of each factory will differ. So, for example, our Viennas are doing extremely well. And this is our meat plant in Sablamar. So I would say like 3 years ago, pre-COVID, right, we normally produce about, I would say about 30,000 cases per month of Viennas. Believe it or not, the demand for Viennas is so high that that demand has gone up to 80,000. So I made the point, Arthur, to say that certain lines at certain factories are almost fully utilized. I think the Vienna line we've been running overtime to keep up with demand. Other lines are not as utilized. But in speaking to Zach Mars, who is in charge of manufacturing for the group, we are at a figure of just under 50% total utilization, 40%. So I would say to you that yes, that's a key objective of GraceKennedy, to get the capacity utilization up. And we're actually engaging other brand owners for us to produce on their behalf. So, for example, I know we were having discussion with Lasco and Seprod and others. And it's vice versa, where Seprod can produce some things for us. You know, so it's a great question, and it's part of our strategy going forward to get our capacity utilization up for our factories. One of the things that we've been having a challenge with is actually the supply of bottles. Tropical Rhythms is doing so well. Mrs. Carr will tell you, in the USA market, it is really growing like this. UK, Canada, Mrs. Chambers doing very well, but we don't have enough bottles to produce in Jamaica. So that's a challenge that we have. So the utilization for that line will be down, although hopefully that's temporary. I understand that we're going to get back to full capacity by August of this year. Unfortunately, the summer would have been almost finished. So 40%, Arthur, and yes, you're correct. The strategy is on to try and find other brand owners for us to manufacture for. And in fact, interestingly, if you look at some of these chains in the USA, Canada, and the UK, they are actually producing what you call store brands. Some of them even producing jerk store brands. And one of the things that we have said is that we need to engage them to see if they want us to produce their brands that we can do in Jamaica. It's a little bit slow because of COVID, but it still remains a strategy of how can we produce the store brands for some of these larger chains. But thanks for that question. That's a great question. Let me see what else is there. I have quite a bit from David Rose. Let me see if I can. Catherine, they're asking about e-commerce. This is David Rose, our favorite journalist. About e-commerce for high-low, but he's also asking about the high prices.
Well, e-commerce has done exceptionally well for us, and as we know, at the beginning of COVID, we had a very small delivery service through our Manor Park store, and we decided to expand that to 5 other stores throughout the island. And then we built on top of that our e-commerce service, which has done exceptionally well. Now, as life has come somewhat back to normal, we're seeing the usage of e-commerce go down a little bit, but that means that we actually have more transactions in store, which is very good for us. But we continue to focus on evolving the platform, focusing it on convenience, and making it very dynamic and engaging for our customers.
And thanks, Catherine. High-low colleagues, I'd share with you for the first quarter of 2022 is actually doing very well. Congrats, Catherine and Gail and Frank. The performance has been very good, the best I've seen it for a long time. Congrats, guys. Mariam, David Rose is asking again about FGB, the rising interest rates, which I shared with the shareholders in my presentation. How is the bank? How is it going to impact the bank, and how are we dealing with it?
Okay, thank you. Thanks for the question. Afternoon, everyone. So the banking sector has been cautious about when and how to raise interest rates. But given what is happening in the macro environment, we've realized that we have really no choice. We're going to be very thoughtful about how we raise rates, but we are taking up rates by July of this year. What we're doing, though, is where we can, we're moving the tenor out so that the monthly payments don't change. So there'll be very little impact on customers from a monthly payment standpoint. Thank you.
Okay, thanks, Mary. One of the things that, and I'm sure all the bankers are discussing it, is that when your cost of funds goes up and you can't pass on all that increase to your consumers or your clients or your customers, your net interest margin for the bank will reduce. So it's a balance that we are working on, and there are other efficiency exercises, Miriam, that we're working to save costs, so we don't have to pass on the increased costs to our customers. But as you know, in an inflationary environment, you have to manage that very carefully. All right. Prof, I think I'm basically running out of questions. Grace, maybe you're the best person to expand on it. My point that I made about claims and inflation and the impact and what is happening there. And this is from David Rose again.
Just share with David that there are two aspects to it. On the general insurance side, the same challenges we've been talking about around supply and logistics would have also impacted general insurance and the availability and subsequent cost of parts. And so that has flown through the entire general insurance sector. If you see the numbers, you'd have seen that all the general insurance companies are being impacted with motor claims just through the cost of parts. On the medical inflation side, which would impact Canopy, you'd also know that the inflation that you're seeing in the markets, in the overseas markets and locally, would impact the cost of drugs and subsequently impact the cost of claims as well. So that's what you're really seeing. It's the external factors that are driving what we're seeing happening with the claims, both on general insurance and with the health insurance portfolios.
Thank you very much, gracious Grace. Chairman, I have no further questions, but can I invite Gail just to read, if you have any questions after the AGM is officially over, if you can send us an email. It's gkinvestors.com.
gkinvestor@gkco.com. gkinvestor@gkco.com. It's on the screen, and we can also put it back in the chat.
Okay, and I'd really love to hear from our shareholders who didn't get a chance to ask any questions. It's very important that we get feedback, we get questions, we get comments from the owners of the company. Mr. Chairman, thank you very much.
Thank you very much, Don and the executive team, for those enlightening responses to the various questions which have embellished the presentations that you, Mr. CEO, and our CFO provided. I trust that members, even as you go through the report, other questions will come up. Please use the address and send them in, and the team will respond to you. Suzanne? I'm sorry. Okay, very good. We now move to the section of the AGM that deals with the auditor's report, the director's report, and the statement of accounts. The auditor's report, the director's report, and the audited group accounts have been circulated to shareholders. And I will now ask Mr. Paul Williams of PricewaterhouseCoopers to read the auditor's report. Paul?
Good afternoon. Independence Auditor's Report to the members of GraceKennedy Limited. Report on the audit of the consolidated and standalone financial statement. Our opinion. In our opinion, the consolidated financial statement and standalone financial statement give a true and fair view of the consolidated financial position of GraceKennedy Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at 31st December 2021, and of their consolidated and standalone financial statement, and their consolidated and standalone cash flow for the year then ended in accordance with International Financial Reporting Standards, IFRS, and with the requirement of the Jamaican Companies Act. We have audited the group consolidated and standalone financial statement comprise the consolidated statement of financial position as of 31st December 2021, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flow for the year then ended. The company statement of financial position as of 31st December 2021, the company income statement for the year then ended, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flow for the year then ended, and the notes to the financial statement, which include significant accounting policies and other explanatory information. Basis of opinion. We conducted our audit in accordance with International Standard and Auditing ISAs. Our responsibilities under these standards are further described in the auditor's responsibility for the audit of the consolidated and standalone financial statement section of our report. We believe the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with International Code of Ethics for Professional Accountants, including International Independence Standard, issued by the International Ethics Standard Board for Accountants, IESB code. We have fulfilled all other ethical responsibilities in accordance with the IESB code. Our audit approach. Audit scope. As part of designing our audit, we determine materiality and assess the risks of material misstatement in a consolidated and standalone financial statement. In particular, we consider where management made subjective judgments, for example, in respect to significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all of our audit, we also address the risks of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material restatement due to fraud. We have tailored our audit scope. We tailor the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and control, and the industries in which the group operates. In assessing the risk of material misstatement to the group consolidated financial statement and to ensure we had adequate quantitative coverage of significant accounts in the consolidated financial statement, we design and perform audit procedure over various components. The group comprised 47 reporting components, of which we selected 25 components, which represent the principal business unit within the group and covered entities within Jamaica, Barbados, Bahamas, Trinidad and Tobago, Eastern Caribbean countries, Canada, the United Kingdom, the United States of America, and Guyana. Of the 25 components selected, we perform an audit of the complete financial information of 12 components, full scope components, which were selected based on their size, risk characteristic for both. For the remaining 13 components, specific scope component, we perform audit procedures on specific account and our specific procedures within the component that we consider had potential for the greatest impact of significant account in the consolidated financial statement, either due to the size of these accounts or the risk profile. In relation to the remaining component, none of which are individually greater than 2% of the group's profit before tax, we perform other procedures including analytical review procedures, testing of consolidated journal, intercompany eliminations, and foreign currency translation recalculation to respond to any potential risks of material misstatement in the group consolidated financial statement. For components that are in scope of the group audit, we use component auditors from PwC network firm, and for non-PwC firms who are familiar with the local laws and regulations to perform this audit work. Throughout the audit, we had regular meetings and correspondence with management and component audit team to follow up on progress of work for all components. The group engagement team review working papers relating to the audit approach and findings of the component auditors. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significant in our audit of the consolidated and standalone financial statement of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statement as a whole and informing our opinion thereon. And we do not provide a separate opinion on these. Key audit matters. The first key audit matters deals with accounting for business combination, in particular intangible assets for the group. Refer to Note 2B, 4XI and 39 of the consolidated and standalone financial statement for disclosure of related accounting policies and balances. On the 31st of July, 2021, the group acquired 100% of share capital of Scotia Insurance Eastern Caribbean. Management assessed that the acquisition qualified as a business combination, resulted in the recognition of a bargain gain in the amount of $593.5 million. Validation of identifying net assets acquired were performed as part of the purchase price allocation, the PPA, which resulted in the group recognizing licenses, exclusive agency arrangement, agreement, intangible assets in the amount of $190.6 million and $894.4 million, respectively. We focus on this area due to the significance of intangible assets identified and due to the nature of the business combination. The accounting requirements for which can be complex and require management to exercise judgment in determining certain estimates. The most significant is the determination of the PPA. Management engaged external experts to assist with the determination of the PPA, which encompass identifying and estimating the fair value of intangible assets acquired. The determination of fair value involves significant areas of judgment, which is based on inputs and assumptions in the model, such as business growth rate, attrition rate, future margins, and discount rate. Our audit addressed this key audit matter by our approach in addressing this matter with the assistance of our specialists involved the following procedures, among others. Read the share purchase price agreement and evaluate the appropriateness of the accounting for the acquisition as a business combination against management accounting policies and the appropriate accounting standards. Held discussion with management to understand and evaluate their basis for determining assumptions. We also evaluated the application of the valuation methodology utilized to derive the fair value of the identifiable intangible assets. We test the reasonableness of valuations, assumptions, and input by corroborating the key variables being the business growth rate, the attrition rate, future margins, commission paid, discount rate, the historic and prospective financial, industrial, and economic information, taking into consideration our knowledge of the group and its industries. Where relevant, we consider third-party sources and challenge management's future revenue estimates, considering changes in the market or actions by competitors. We also assess the competence and capability of management valuation expert. We perform scenarios analysis, testing by varying the growth rate, the attrition rate, the commission paid, and the associated impact on the discounted cash flow as it pertains to the exclusive agency agreement. We also recalculate in the bargain gain, being the difference between the total net consideration paid and the fair value of the net assets acquired for mathematical accuracy. Based on the audit procedures performed, management accounting judgment and estimate relating to the valuation of intangible assets were not unreasonable. The second key audit matter deals with valuation of incurred but not reported, IBNR, claims for property and casualty contract for the group. Refer to notes 2R, 4IV, and 17 in the consolidated and standalone financial statement for disclosure of related accounting policies and balances. As of 31st December 2021, total insurance reserve amounted to $10.8 billion, which include IBNR reserve of $1.1 billion, or 0.9% of total liabilities. The methodologies and assumptions utilized in developing IBNR reserve involve significant degree of judgment. The liabilities are based on the best estimate, ultimate cost of all claims incurred but not settled at the given date, whether reported or not, together with related claims handling costs. There is generally less information available in relation to these claims, which can result in variability between the initial estimates and final settlement. A range of methods may be used to determine these provisions. Management uses qualified external actuaries to assess and determine the valuation of the IBNR claims. We focus on this area because there are a number of explicit and implicit assumptions relating to the expected settlement amount and settlement pattern of claims underlined in these methods, and to value determined are subject to complex calculation. Our approach in addressing this second key audit matter with the assistance of our actuarial experts involved the following procedures, among others. We tested the completeness, the accuracy, reliability of the underlying data utilized by management and their external actuarial expert to support the actual valuation. We also perform a method and assumption analysis of the actual valuation prepared by the group actuary. We evaluated the assumption used by management and assessed the methodology used for appropriateness and consistency with established actuarial practices and methodology used in the prior year. The result of our procedures indicated that significant estimates and assumptions used by management were not unreasonable, and that the methodologies used were actually established, accepted, and appropriate in the circumstances and consistent with prior years. The third key audit matter, IFRS 9, financial instrument, probabilities of default, forward-looking information, and significant increase in credit risk at the group level. See notes 2A, 3C1, 4V11, 6, and 9 of the Consolidation and Financial Statement for disclosure of related accounting policies, judgment, estimates, and balances. As of 31st December 2021, the group's loan and advances totaled $33.3 billion. The group investment securities measured at amortized cost and fair value through other comprehensive income total $47.9 billion. In aggregate, the above exposure represents 41% of the total asset at the reporting date. The resultant impairment recorded under the expected credit loss model, the ECL impairment model, amounting to $1.6 billion of loans and advances on $336.4 million for debt securities. In assessing the impairment of IFRS 9, prescribe a forward-looking ECL impairment model which takes into account reasonable and supportable forward-looking information as well as probability of default, the PDs. The PDs represent the likelihood of a borrower defaulting on its obligation over the next 12 months or the remaining lifetime of the obligation. The 12 months and the lifetime PDs are determined differently for loans and investments. For loans and advances, management developed PDs based on the group-specific historical default rate for which industry classification. In performing historical analysis, management identified economic variables impacting credit risk and ECLs for each portfolio. For investment securities, which include debt securities comprising sovereign and corporate securities, PDs are developed by reference to external data collated by Standard & Poor's, which adjustment for industry and country-specific risks where appropriate. The ongoing economic impact of COVID-19 resulted in significant increase in credit risk for a number of borrowers who migrated from stage 1 to stage 2 based on an assessment of the industry in which the borrower operates. and other relevant factors. In event of the significant increase in credit risk, an allowance or provision is required for the ECL, resulting in all possible defaults events over the expected life of the financial instrument lifetime. The estimation and application of forward-looking information requires significant judgments. Stage 1 and Stage 2 credit loss allowances are modeled based on macro variables or changes in macro variables which closely correlate with credit loss in the relevant portfolio. Each macro scenario used in the ECL calculation incorporates forecasts of the relevant macro variables. The estimation of the ECL in Stage 1 and Stage 2 is a discounted probability-weighted estimate that considers a minimum of 3 futures macro scenarios. The base case scenario is based on the macro forecasts which are publicly available. Upside and downside scenarios are set relative to the base scenarios based on reasonable possible alternative macro conditions. Additional adjustment to the best case and worst case scenario weightings were required as a result of COVID-19 pandemic. We focus on this area due to the impact of COVID-19 on the credit risk, the complexity of the techniques used to determine the PDs, and identify in the significant increase in credit risk, and the number of significant judgments made by management regarding possible future economic scenarios as it pertains to debt securities and loan and advances. Our approach in addressing this key audit matter with the assistance of our own valuation specialists involved the following procedures, among others. We update our understanding of management's ECL model, including any changes to source data and assumptions. We tested the completeness of all loan and advances and debt securities to determine whether all items were included in the ECL model by agreeing the model to the detailed loan and securities listing. We evaluated the reasonableness of management judgment pertaining to the PDs, the significant increase in credit risk and forward-looking information, including macro factors impacting the weighting of the scenarios due to the negative impact of COVID-19 as follows. For loan and advances for PDs, we tested the critical data files used in the ECL model for the PD determination, such as default rate, effective interest rate, write-off data, loan type by tracing back to the source document. We also reperformed the calculation of days past due, a key data input in the PD's parameters in the group banking system on a sample basis. For significant increase in credit risk, we evaluated staging of loans and advances by identifying the industry severely impacted by the pandemic. This includes industry affected by restriction imposed by government in countries where the group operates. We also evaluated the loan of borrowers from these industries migrated to Stage 2 where appropriate. For debt securities, for the PDs, we tested the critical data files used in the ECL model, such as the maturity date, amortized cost, accrued interest, credit rating, interest rate, by tracing data back to relevant source document. We also agreed the credit rating and historic default rate used to calculate the PDs on a sample basis to external sources, such as external rating agency. For the significant increase in credit risk, we tested on a sample basis the accuracy of the initial credit risk, the credit risk at the reporting date using relevant agency definition of investment grade, and evaluated the appropriateness of the group classification of debt securities as Stage 2. We also perform an independent qualitative assessment for a sample of borrowers to determine if any of the adverse public information affecting the criteria used to perform in the staging. We also inspected the financial statement on a sample basis of borrowers to determine if there were any significant downturn in financial performance before and during the pandemic. This aided in assessing the stages for borrowers, particularly for those who requested forbearance as a result of COVID-19. Forward-looking information for loan and advances. We assess the reasonableness of the group methodology for determining economic scenarios, including the appropriateness of the gross domestic product and unemployment rate economic factors utilized by management. We also evaluated the reasonableness of the increase in the weighting used for the worst-case scenario by agreeing the forward-looking information to external sources published and pronounced by reputable third parties. We sensitized the probability rating using the ECL calculation. The result of our procedures indicated that the assumption used by management for determining the probabilities of default, the significant increase in credit risk, and the forward-looking information were not unreasonable. The next key audit matter, goodwill impairment for United States of America operations for the group. Refer to note 2G, 41, and 11 of the consolidated and standalone financial statement for disclosure relating to accounting policies, judgment, and estimates and balances. The total carrying value of goodwill as of 31st December 2021 is $1.9 billion, of which 1.15 relates to the U.S. operation. In accordance with IAS 36 impairment of assets, management performed an annual goodwill impairment assessment to determine whether the carrying value exceeds the recoverable amount in the cash flow generation unit to which the goodwill is allocated and is therefore impaired at the reporting date. Goodwill relating to the recoverable amount of a CGU is calculated as the higher of the value in use and fair value less cost of disposal. Management determined the recoverable amount by reference to value in use, which is based on discounted cash flow projection, over which management makes significant judgment on key inputs. As a result of the assessment, management determined there was no impairment as of 31st December 2021. We focus on the area of goodwill impairment assessment, as goodwill impairment assessment requires significant management judgment and estimation, is sensitive to changes in key assumptions, and is due to changes involved in determining the impact of COVID-19 on those key assumptions. The key assumptions used were assessed by management as being the revenue growth rate, the discount rate, the earnings before interest, taxes, depreciation, and amortization, EBITDA to revenue, and the capital expenditure to revenue. Our approach to addressing the matter with the assistance of our own valuation expert involved the following procedures, among others. Update our understanding of management approach in performing annual impairment assessment. This included the process by which management's key assumptions and methodologies were developed and assessing their appropriateness. We compare previous forecasts to actual in order to assess the performance of the business and the extent to which reliance could be placed on management ability to forecast. We tested the key assumptions, including the impact of COVID-19 on these assumptions, as follows. Evaluated the revenue growth rate and the discount rate against valuation of similar companies. We also evaluated the EBITDA and capital expenditure to the revenue assumptions against internal and external derived data where available. We also tested the calculation for mathematical accuracy and assessed the sensitivity of the calculation by varying the key assumptions and adjustment within management cash flow forecasts. The results of our procedures indicate management determination that goodwill was not impaired at the reporting date was not unreasonable. The final key audit matter deals with valuation of the defined benefit pension scheme and other post-retirement obligation for the group and the company. Refer to note 2M, 4, 3, and 14 of the consolidated and standalone financial statement for disclosure, relevant accounting policies, judgment, and estimates and balances. The group has a defined benefit scheme and other post-employment obligations, which are significant in the context of the overall estimate of financial position of the group and the company. Pension scheme obligation totaled $35.1 billion for the group and company as of 31st December 2021. The pension scheme obligations are included as part of the net pension asset of $7.1 billion on the respective financial statement position. Other post-employment obligation amounted to $6.8 billion and $3.2 billion for the group and the company, respectively. We focus on this area as the valuation of defined benefit liabilities and other post-employment obligation requires significant level of judgment and technical expert in determining appropriate assumptions as well as the impact of COVID-19 on the key assumptions. A number of key assumptions can have a material impact on the calculations of the liabilities and the obligation, including salary increases, inflation rates, pension increases, discount rate, and mortality rate. Management uses external actuaries to assess in determining these assumptions and in valuing the defined benefit scheme and other post-retirement, post-employment obligation. Our approach in assessing the matter with the assistance of our expert involved the following procedures, among others. We evaluated management assumptions made in relation to the valuation of the defined benefit scheme and other post-employment obligation, and the assumption relating to salary increases, pension increases, mortality rates by comparing them to national industry statistics and averages. We also agreed the discount rate and the inflation rate used in the valuation of the pension scheme and other post-employment obligation to those issued by the Institute of Chartered Accountants of Jamaica and targets set by the Bank of Jamaica. We performed inquiries with management and management external actuaries and evaluated the key economic assumptions used, including the impact of COVID-19 in the calculations of the liability. We tested the completeness and accuracy of data extracted and supplied to the group actuary, which is used in the actual calculation. Based on the audit evidence obtained, we determined that the available audit evidence supported the data and assumption used by management in the actual valuation. Other information. Management is responsible for other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statement and auditor's report thereon, which is expected to be made available to us after the date of this audit report. Our opinion of the consolidated and standalone financial statement does not cover other information, and we do not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statement or our knowledge obtained in the audit, or otherwise appear to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we're required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statement. Management is responsible for the preparation of the consolidated and standalone financial statement that gave a true and fair view in accordance with IFRS and with the requirement of the Jamaican Companies Act, and for such internal controls as management determine is necessary to enable the preparation of the consolidated and standalone financial statement that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statement, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intend to liquidate the group or the company, or to cease operation, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and the company financial reporting process. Auditor's responsibility for the audit of the consolidated and standalone financial statement. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISA will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or in aggregate they could reasonably expect to influence the economic decision of a user taken on the basis of these consolidating and standalone financial statements. As part of our audit in accordance with ISA, we exercise professional judgment and maintain professional skepticism throughout the audit process. We also identify and assess risks of material misstatement of the consolidated and standalone financial statement, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide the basis for our opinion. The risk of not detecting material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal controls. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company's internal control. Evaluate the appropriateness of accounting policies used in the reasonableness of accounting estimates and related disclosure by management. Conclude on the appropriateness of management use of going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists resulted to events or conditions that may cast doubt on the group and the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our audit report to the related disclosures in the consolidated and standalone financial statement, or if such disclosure are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our audit report. However, future events or conditions may cause the group or the company to cease as a going concern. Evaluate the overall presentation, structure, content of the consolidated and standalone financial statement, including disclosure, and whether the consolidated and standalone financial statement represent the underlying transactions and event in a manner that achieves fair presentation. We obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statement. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate to those charged with governance regarding, among other things, the planned scope, timing of the audit, and significant audit findings, including any significant deficiencies in internal controls that we identify during the audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding the independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, actions taken to eliminate threats or safeguard apply. From the matters communicated with those charged with governance, we determined that those matters were of most significant in the audit of the consolidated and standalone financial statement of the current period and are therefore the key audit matters. We describe these matters in our audit report unless law or regulation precludes public disclosure about the matters, or when in extremely rare circumstances, we determine that the matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest and benefit of such information. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we obtain all information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as appear from our examination of those records and the accompanying consolidated and standalone financial statement are in agreement therewith, and give the information required by the Jamaican company to act in a manner so required. The engagement partner on the audit resulted in this independent auditor report is Paul Williams, signed PricewaterhouseCoopers, Chartered Accountant, 1 March 2022, Kingston, Jamaica. Thank you, Mr. Chair.
Thank you very much, Mr. Williams. You deserve both bottles of Catherine Speak. May we have a motion that the director's report be taken as read? Catherine Kennedy moves, and Grace seconds. Shareholders online are reminded to use the raise hand feature to move or second this motion. For those shareholders in the room, please raise your hand as you have just done. I would now like to ask that the second resolution be moved. It is moved by David Rose, seconded by Arlene Davis. Shareholders online, I invite you to cast your vote by clicking the for or against button on your screen. You have 30 seconds to vote on this resolution. Shareholders in the room, please raise your hand if you are in favor.
In times like these, the safety of my family is my #1 concern. Even though getting insurance for my car, home, and the business is important, I don't want to go somewhere if I don't have to. I need to do things I need to do while protecting what really matters.
At GK Insurance, your safety and comfort is of top priority. Visit gk-insurance.com or call 888-429-5454. Ask us about our monthly payment plans. GK Insurance, because we care.
The shareholders have voted. The results are in. The percentage in favor, again, I'm not seeing it on the screen here. Do you have it? 47 persons have in favor and 0 against. And that doesn't include those persons who were in the room, and I saw all of them voting in favor of the motion. I therefore declare the motion to have carried. If the meeting objects, then the secretary will be prepared to read the director's report. Will the secretary please table the reports together with the audited group accounts? May we have a motion that the audited group accounts for the year ended December 31st, 2021, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Mr. Ediston, thank you. Seconded by Adjoe Dixon. I would now ask that the third resolution be moved. Camille Mundell Barnett online. Barrett online. Sorry, Camille, for butchering your name. and Mr. Frank James in the room. Shareholders online, I invite you to cast your vote by clicking the for and against or against button on your screens, and you have 30 seconds in which to do so.
You're going to circle around, then you're going to stand in the center, and then you're going to come back for the finale. Come on, it's time to go.
It's a ragamuffin and Caribbean style this.
Yeah, man, this is the real Caribbean inside. Enjoy Grace patties in mild beef, spicy beef, curry chicken, or vegetable. Find it in your supermarket freezer.
$47 for, no one against. I therefore declare the motion to have carried. We now move to the approval and ratification of dividends. May I have a motion that as recommended by the directors, that the interim dividend paid on the 6th of April 2021, the 15th of June 2021, and the 24th of September 2021, and the 16th of December 2021 be, and they are hereby declared as final, and no further dividend be paid in respect of the year under review. Shareholders online, again, you may raise your hands to move or second this motion. And for those shareholders in the room, please raise your hands. Grace and Fred Kennedy online. I would now I would now ask that the fourth resolution be moved. Sorry, it was already moved and seconded. Shareholders online, I ask you to cast your votes by clicking the for or against button on your screens. And as before, you have 30 seconds in which to do so.
Knowing you can help take care of your favorite aunt or any of your other loved ones living overseas gives you peace of mind. Western Union makes it easy to send money fast, nationwide or around the world. Western Union, moving money for better.
Again, we have 43 for and 1 against. I therefore declared the motion to have carried. We move to the re-election of directors en bloc, and resolution for permission to re-elect en bloc the board members. I now ask our corporate secretary, Mrs. Gail Moss-Solomon, to take the chair for the purposes of the next resolution, as I am one of the directors subject to re-election. Mrs. Moss-Solomon.
Thank you, Chairman. The directors retiring from office by rotation are Mrs. Gina Phillips-Black, Dr. Indiana Minter-Coy, and Professor Gordon Shirley. Mrs. Phillips-Black is an attorney at law and partner of Myers, Fletcher & Gordon. She has been chair of Grace Kennedy's Corporate Governance and Nomination Committee since 2012. Her main areas of expertise are commercial law, banking, mergers and acquisitions, and corporate governance. Dr. Indiana Minter-Coy is a senior lecturer and academic director for the master's programs at the Mona School of Business and Management at the University of the West Indies, Mona campus. Her main areas of expertise are diasporas, migration, entrepreneurship, and corporate governance. Professor Gordon Shirley has been chairman of GraceKennedy Limited since 2014. He is president and CEO of the Port Authority of Jamaica, and his main areas of expertise are strategic planning, technology, change leadership, product and service delivery, and governance. All directors presented here have an excellent record of board meeting attendance and participation. The board is satisfied that the directors continue to make a valuable contribution to the board and have demonstrated their commitment to continue serving as a director. Further details on our directors are available on the GraceKennedy website and in our 2021 annual report. The directors retiring from office by rotation pursuant to Article 102 of the company's Articles of Incorporation are therefore Mrs. Phillips Black, Dr. Minter-Coy, and Professor Gordon Shirley, who, being eligible, offer themselves for re-election. May we have a motion that the directors retiring by rotation and offering themselves for re-election, that is, Mrs. Gina Phillips Black, Dr. Indiana Minter-Coy, and Professor Gordon Shirley, be re-elected en bloc. Shareholders online are reminded to use the raise hand feature to move or second this motion. Shareholders in the room, please raise your hand. I would now ask that the fifth resolution be moved. Moved by David Rose and seconded by Naomi Holness. Shareholders online, I invite you to cast your vote by clicking the for or against button on your screens. You have 30 seconds to vote for this resolution. Shareholders in the room, please raise your hand if you are in favor.
She's shopping for everything she needs to make Saturday soup. He's buying things to make dinner on date night. And yes, she's overseas. But she's also buying groceries for grandma in Jamaica. Hilo makes shopping convenient. Our supermarket is now at your fingertips with Hilo online. It's easy. Simply log on, select your items, and pay with your debit or credit card. You shop, we deliver. No lines, no hassle, no closing time. Start shopping at HiloFoodStoresJA.com. Conditions apply.
Hilo makes it easy.
The results are in and can be seen on your screens for those of you online. We have 100% in favor, that's 51 persons, none against, as well as the voters in the room. I therefore declare the motion carried. May we therefore please have a motion that Mrs. Gina Phillips Black, Dr. Indiana Minter-Coy, and Professor Gordon Shirley be and are hereby re-elected directors of the company. Shareholders online are reminded to use the raise hand feature to move or second this motion. Shareholders in the room, please raise your hand. I would now ask that the sixth resolution be voted on. Please cast your votes at this time.
Global Bank helps small businesses to win with simplified account opening for businesses, up to $15 million in loans for startups, and special support for our female business owners. Now, that's simple and easy business banking. Get started today. Contact us at 888-CALL-FGB. First Global Bank, your commercial bank from GraceKennedy.
Okay, so the results for resolution are can I have someone move and second? Frank James, Jody Ann Barrett. Okay. And now can we launch this resolution, please, that Mrs. Phillips Black, Dr. Indiana Minter-Coy, and Professor Shirley be re-elected.
businesses to win with simplified account opening for businesses, up to $15 million in loans for startups, and special support for our female business owners. Now, that's simple and easy business banking. Get started today. Contact us at 888-CALL-FGB. First Global Bank, your commercial bank from GraceKennedy.
The results are in. We have 100% in favor of this resolution. I therefore declare the motion carried. I will now hand back to Professor Gordon Shirley.
Thank you very much, Mrs. Moss-Solomon. May we have a motion that the amount shown in the accounts of the company for the year ended 31st of December 2021 as fees of the directors for their services as directors be and is hereby approved, and B, that the fees of the directors for the year ended 31st of December 2022 be fixed by the Compensation Subcommittee, a subcommittee of the Corporate Governance and Nominations Committee of the Board of Directors. Shareholders online are reminded to use the raise hand feature to move or second this motion. Shareholders in the room, please raise your hands. Suzanne? Gail? Dale? I would now ask the shareholders online, I invite you to vote. I invite you to cast your vote by clicking on the for or against button on your screens. You have 30 seconds in which to vote on this resolution. Shareholders in the room, again, please raise your hands. Again, we have those in favor, 45 out of 45, and against, no votes. So I declare that the motion has carried. We next turn to the appointment of auditors. The auditors of the company, PricewaterhouseCoopers Chartered Accountants, will continue in office pursuant to Section 154 of the Companies Act. May we please therefore have a motion that PricewaterhouseCoopers Chartered Accountants, having signified their willingness to serve, continue in office as auditors of the company pursuant to Section 154 of the Companies Act to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. Shareholders online are reminded to use the raise hand feature to move or second the motion. Shareholders in the room, please raise your hands. I would now ask that the 8th resolution be moved. Naomi, was that you? And Margaret Campbell online. Shareholders online, I invite you to cast your vote by clicking the for or against button on your screens. You have 30 seconds to vote on this resolution. Shareholders in the room, please raise your hands.
In times like these, the safety of my family is my #1 concern. Even though getting insurance for my car, home, and the business is important, I don't want to go somewhere if I don't have to. I need to do things I need to do while protecting what really matters.
At At GK Insurance, your safety and comfort is of top priority. Visit gk-insurance.com or call 888-429-5454. Ask us about our monthly payment plans. GK Insurance, because we care.
Those for, 100%. Those against, none. I therefore declare the motion as having been carried. I've just put the CEO on the spot. All these ads are domestic ads. Yes.
No, I think one was
The patty
the patty.
Okay. There are some really exciting ads in the international marketplace. So next year, Don, I think we'll jazz it up with some of those. We move to the special business, the amendment of articles. I will now ask Mrs. Gail Moss-Solomon, our company secretary, to take you through the item of special business in a notice of the meeting regarding amendments to the company's articles of incorporation. Mrs. Moss-Solomon.
Thank you, Suzanne. In line with recent amendments to the Companies Act of Jamaica, a recommendation is also being made to amend the company's Articles of Incorporation to provide for these additional or virtual methods of dissemination of notices and documents. As outlined in Resolution 6 of the Notice of Meeting, the proposed amendments read as follows: that pursuant to Section 10 of the Companies Act, the Articles of Incorporation of the company be altered by adding after Article 146C the following article to be numbered 146D. Notwithstanding any other provision of these articles, a notice and any accompanying document to be given by the company may be given by means of posting same to the company's website and or the website of the Jamaica Stock Exchange and or the Trinidad and Tobago Stock Exchange, whichever is applicable and for as long as the company remains a listed company on either exchange, and or the website of any other regulator of an exchange on which the company is listed. Any notice published or document sent by this means shall include all the elements required in these articles or any applicable law to be included in such notice. Notice of a meeting is validly given and a document sent by means of a website when the company notifies its members of the presence of the notice and or the document on the website, and the website link or address to be utilized to access same is included in the notification. Where the notice is in relation to a general meeting, such notification shall 1. State that it concerns a notice of a meeting of the company, 2. Specify the place, date, and time of the meeting, and 3. State whether the meeting is an annual general meeting or an extraordinary general meeting. The company shall publish such notification in a daily newspaper, printed and circulated nationally, and on its website at least 7 days before the minimum notice period required for such notice. Where the notice and or document is in relation to the company's annual general meeting, the notification shall also include a statement 1 with the website link or address to be utilized to access the information required to be provided to members pursuant to Section 153 of the Companies Act, and 2, as to how a hard copy of same may be requested by any member free of cost. Notice given by a website shall remain available on the website throughout the period beginning with the date of the notification and ending with the conclusion of the meeting. A failure to make information available throughout the period is disregarded if 1. The information is made available on the website of the company for part of that period, and 2. The failure is wholly attributable to circumstances that it would not be reasonable to have expected the company to prevent or avoid. I will now hand back to the chairman to have this resolution moved.
Thank you, Gail. Thank you, Suzanne. May we have a motion for the approval of these amendments as outlined in the notice of meetings, that pursuant to Section 10 of the Companies Act, the articles of incorporation of the company be altered by adding, after Article 146C, the following article to be numbered Article 146D. Shareholders online are reminded to use the raise hand feature to move or second this motion. Shareholders in the room, please raise your hand. I would now ask that the 9th resolution be moved. Catherine and Mr. Elliston. I now invite shareholders online to cast your votes by clicking on the for or against button on your screens. You have 30 seconds in which to do so, and shareholders in the room, please raise your hands if you are in favor.
You're going to circle around, then you're going to stand in the center, and then you're going to come back for the finale. Come on, it's time to go.
It's a ragamuffin and Caribbean style this.
Yeah, man, this is the real Caribbean inside. Enjoy Grace patties in mild beef, spicy beef, curry chicken, or vegetable. Find it in your supermarket freezer.
Those four have it. It's 100% for the 2 votes, none against. I therefore declare the motion to have carried. That, ladies and gentlemen, brings us, I know you'll be sad to know, but it brings us to the conclusion of our meeting. I would like to thank you all for your continued support of GraceKennedy. I think I speak on behalf of all of our executives and the board. We are extraordinarily delighted by the support that we continue to get from our shareholders and, in general, all of our stakeholders. I'd like to thank you for your continued support and for the participation here today in our AGM. I'm sure you will agree with me that today's meeting has been a success. We thank you. We thank the Visual Technical Solutions for providing technical support for today's annual general meeting. Thank you also to the hard-working GraceKennedy team who made today's AGM possible. And of course, a very big thank you to the entire GraceKennedy family working in our businesses around the world for your continued dedication and commitment to our company. We could not have celebrated this monumental milestone of 100 years without you. To everyone attending our 2022 annual general meeting, we thank you and we ask that you continue to do all you can to keep yourself and your families safe and healthy. Thank you very much, ladies and gentlemen.